Hi, welcome to the Market Alert for Tuesday, the 1st of November 2016. So we're just 7 days away now from the US elections, and that's all I'm going to say about it today. So we've got a situation where the market yesterday was really quiet in a sideways range. In fact, if we just do a quick measurement here, we'll probably find that the range was a total of 66 points, and as I warned in last week's Market Alert and continue to do so, the closer we get to the election, the narrower this trading range is going to become. You can see we've got a bit of a lift in the markets there overnight, but this is only a 50-point range. So again, the first hour is your best hour, and after that it's going to be the markets turning into a sideways range unless something else comes out of the woodwork to move the markets, and today is going to be like that as well, also compounded by the fact, of course, that it's Tuesday and the market will have factored in the Clinton investigation, da-di-da-di-da. So first hour is the best hour, otherwise you are going to be fighting the markets in activity, which is not a good idea. So yesterday we had the trade, sent a note out to say that call it a day. Then we had another buy signal which failed, and then there was another buy signal later on which actually went on to produce a profit. But you can see that it's just very quiet, and this is a lot clearer when you look at the daily chart. You can see here the range now is well and truly defined. The market up above the 20-bar average here for the time being, but very quiet. The volume also dropping off yesterday as well. News wise today, French Italian closed, manufacturing for the UK and ISM manufacturing PMI out at 2 p.m. No central bankers once again. They are staying well out of this political race at the moment. They don't want to be seen to be saying anything that could influence either side, although Wall Street is bought and paid for by Clinton, of course, or rather the other way around. Wall Street have bought and paid for Clinton, and this is already priced into the market as well, as you can see with the market being on the high still. So we've got this situation where it's very sideways. The range of the bars are becoming narrower, and sometimes you just have to know when to stop fighting as well. As I mentioned last week, be careful about wanting to be in the markets when you don't have to be in the markets, because a week tomorrow, which will be the 9th, we will know hopefully, who knows with this election, who will be heading for the White House, and then we'll get the volatility we want, and then we can make the money we want. So sometimes you just have to keep the gunpowder dry and sit on your hands. And in the early days of trading, when I used to phone the brokers in California to place orders, we used to have a saying: when you feel like trading and you shouldn't, then you should open the drawer on the desk, put your fingers in it and slam it, and those fingers are the ones you use to actually dial the actual broker with. Of course, today it's just a mouse click, so it's a lot easier to be tempted to just jump in and out. But in those days there was a way of actually stopping yourself, and that was to put your dialing fingers in the drawer and slam it, and then wait for the pain to go off to see if the decision to trade was worthwhile or not. A bit brutal, I know, and of course it's just a metaphor, but sometimes you just have to stop yourself from doing something, as emotion and also the lack of clarity and just plain wanting to trade, or greed in fact of wanting to trade. So sometimes the skill in trading can be to sit on your hands and just wait for those opportunities to arrive, and that's how the big boys make the money. It isn't a case of trading all the time. People think that they're trading all the time, and they're not. They're positioning themselves ready for the trade, and that's something that we have to consider as well. So that said and done, we've only got the implied volatility to look at, 1482. This is increasing. I think they're working on the basis that Trump's going to get in at the moment, and they're pricing the insurance in for the downside. They're making the put options expensive is what they're doing. Put options mean taking bets to the downside, and the higher this goes, the more chance or more expensive they are going to be as well. So this is an interesting picture that's developing here. You would just look at this normally and think nothing of it, but as the market's sideways, you normally get this increasing when the market goes down. The market isn't going down. The market's stuck in that sideways range, but the implied volatility is increasing. So again, the market seems to be pricing in a potential Trump win. As I just said, the market's already priced in Clinton's win because the market's still on the highs. Wall Street have bought and paid for her. But if Trump gets in, he's not bought and paid for. So there will be a massive correction in the market, and they're making the put options expensive now to actually buy, just in case that actually happens. A bit like the Brexit with options on the pound, when everybody thought that the Remain camp would get it, and then we got the surprise shock that they didn't, and sterling was trading around 140. We all saw what happened to that. So again, if you look at the details here, you can see what's potentially being planned in the market. The big boys are protecting themselves there and making a bit of premium money there on the put options. There's nothing else to report. All the news is political. Don't want to get into that. Nothing business-wise really at this stage. Deutsche Bank's all quiet on the Western Front as well. So I won't delay you any further, and I will let you know if I see anything during today. Like I say, word of warning, it's Tuesday. We're 1 week away from the elections, and we noticed already and observed that the trading range is getting narrower, and that should be a warning too. You should heed those warnings when you actually see this in the chart as well, unless something comes out somewhere else. Other than that, sometimes you just have to say, okay, I'll just sit and watch. But you'll know from the first hour, as we have done for the last few weeks. And if the range is not 50 points or more, then you just have to turn it off and walk away. Right, that's it. I will see you in tomorrow's Market Alert. As ever, thanks for your support and also for watching. See you in the next one.